Well, hello folks, this is T. Brian Hayes here from Hayes Advisor Group with your September 2015 Educational Economic Update. In this month's video, we'll talk about some of the economic events that moved markets last month and give you some insight into what they might mean for you as an investor. As always, please stay tuned at the end for a required disclosure statement. September was another turbulent month for stocks as uncertainty around global growth and Federal Reserve policies unsettled markets worldwide. Let's take a look at some of last month's major events. First, worries about China and global growth dogged markets last month and contributed to the volatility. China's economy is lagging and investors are concerned about how a slowdown there will affect growth around the world. Next, surprising at least a few analysts, the Federal Reserve declined to raise interest rates at its mid-September meeting. Fed economists decided to hold pat, mostly because of concerns about how slowing global economic growth might affect the U.S. economy. They also believe that inflation is mild enough not to require a rate raise right away. The Fed's decision means that central bankers are taking a very cautious approach. However, some analysts worry that holding off risks more trouble for the economy down the line. In a separate speech, Fed Chairwoman Janet Yellen laid out a case for raising interest rates later this year, suggesting that the economy is ready, so we'll have to be on the lookout for that. However, she also emphasized that the decision to raise rates will be dependent on data, so we'll have to wait and see what the coming weeks bring. At the end of the month, we got another revised estimate of second quarter economic growth. The latest data showed that GDP growth accelerated to 3.9% from 3.7%. Higher consumer spending and construction drove the gain. Let's just hope that the increased activity holds into the third quarter. As we move closer to the holiday shopping season at the end of the year, we expect domestic fundamentals to play a larger role in markets. While there's no doubt that the international growth picture is rocky, the U.S. economy is driven largely by domestic demand. We hope that additional clarity from the Federal Reserve will give investors the confidence they need to get back into the game. Now, let's take a look at the financial markets for September. After the spike in volatility in August, volatility remained high in September. According to the Canterbury Portfolio Thermostat Volatility Index, we ended September at a CVI of 105. Remember, a CVI reading of 75 or below is considered a very safe zone, and a reading above 90 is reflective of high investor emotion, leading to imbalances between the forces of supply and demand. Markets are behaving irrational right now. You certainly can tell from the huge up and down days in the main market indexes. We are still in a transitional bearish market state right now, but many changes have been made to the managed accounts to limit volatility during these times. So rest assured that the appropriate moves are being made right now in your portfolios to control and limit the risk and to position properly for this new market environment. It'll be an interesting next few months in the market to see if volatility remains high and we turn further bearish, or if volatility starts to diminish where we will head back to a bullish market state. As always, we're keeping a close eye on the financial events and market conditions, and we're going to update our clients as necessary. Though these periods of volatility are stressful, they can and also provide opportunities for savvy investors. As financial professionals, our job is to help position our clients for success in all market environments. So that's it for the September 2015 Educational Economic Update. As always, if you have any questions or concerns about what we discussed here, please give our office a call at 1-800-939-1603. I look forward to meeting with many of you in the upcoming weeks ahead as we do our end of the year and tax planning meetings. Michelle's going to be reaching out to you soon to schedule those appointments. So be on the lookout for that call. Once again, this is T. Brian Hayes here from Hayes Advisor Group, signing off for the month of September 2015. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call again at 1-800-939-1603. We'd be happy to talk to you about any of this information and your specific case. So again, I look forward to seeing you soon. Enjoy the rest of your night.